Alrighty, folks, I love bringing you new faces with new stories, especially when it is a new opportunity for you to buy cash flowing real estate, especially in an environment where existing home sales are down, prices are flat, and cash flow is hard to get. What if I told you you should be checking out new construction? Yes, this is probably an area of the market you certainly have not looked at a lot, but it's definitely worth looking into. And of course, what am I talking about? I'm talking about Lennar, which back in July announced a brand new marketplace aimed at the single family investor. Yes, you and I are targets for Lennar. We've got both Davis and Nate here to talk about it, show it, and say why Lennar. Guys, thank you for being here. I appreciate it.
Thanks. Great to see you. Great to be on the show.
Absolutely. And usually what I do here when there's multiple guests is I go in the order that you showed up. So Nate, you were first. Want to give a quick resume, who you are, and then we'll start doing quick questions.
Yeah, sounds good. So I'm vice president of build to rent and single family rental initiatives at Lennar. So Davis and I are the two-man team that kind of oversee the SFR efforts for the company. So there's obviously a lot going on there across SFR, but that's what we do. I've been in this role for coming up on 8 years now.
Wow. Very, very cool. And Davis, tell us a little bit about yourself.
Yeah, likewise. I'm on the team here with Nate, director of our BTR and SFR group here. So, Nate and I kind of tag team and work together on kind of all things build to rent, single family rental across the country. So it's great to be here with you.
Awesome. Well, build to rent's a very interesting model. I've been talking about build to rent for probably 5 or 6 years now. Again, outside looking in, it's really a market that's been dominated by the big hedge funds. They're buying entire communities, right? They're actually working with builders, perhaps like with Lennar, saying, "Hey, I want 110 units over there. You guys work it out, build to rent." But what I saw, I'll call it 6 months ago with the Lennar announcement, right? The marketplace, which we're going to show in a minute, is a very large national home builder going, this is an exciting market, and let's go to the individual investor. And, as the one rental at a time guy, I got to tell you, most builders wouldn't talk to me for years. And frankly, you guys were selling so many hotcakes, you guys meaning the industry, you didn't need investors. In fact, you probably didn't want them because it would why do you want a rental in your brand new home community? And I think the environment's changing and shifting. And I think this marketplace announcement going to single family buyers like myself is amazing and lots of opportunity there. What kind of led to this initiative, Nate?
Yeah, I'd say, as you mentioned, there's a long history of SFR sales to both institutions and to retail investors, your everyday investors. We've done it all. I mean, Lennar as a company, we've sold over 1.5 million homes. So we've sold
is that all?
To everybody.
Just 1.5.
Yeah. But thousands of those are investors, large investors, medium investors, small investors. We've seen it all. I think what we realized is there's such rich data and underwriting tools that we've seen among your institutional buyer that we wanted to make available to the everyday investor. We thought that was a gap in the offering. In a way, we can, especially for a large builder like Lennar, we'll build over 80,000 homes a year. Like, which ones make sense for rental? And how can we help the everyday investor get to the right home quicker? So that was really what it was about, is bringing those institutional quality tools to your everyday investor.
Yeah. And again, we're going to bring up the marketplace because I got to tell you, and my audience knows this, I'm looking to build a second portfolio in Henderson, Nevada, or call it Vegas. And as soon as you guys announced the marketplace, I started digging in and driving properties and reaching out to the local contact, and very pleased with that experience. So again, I think people really need. I don't think enough people are looking at what Lennar has done. Since I've been talking about Lennar, and it's been about 6 months, I've had probably a dozen people in my community, all the way from Florida out to California, go, "Yeah, we've done a deal with Lennar on the marketplace." So it's clearly working, and it certainly resonates with my community. I'm curious, Davis, when you think about what's transpired over the last 5 or 6 months with going to the one rental at a time, kind of the mom and pop investors, what are they seeing in the marketplace, and how's it been received?
Yeah, as Nate mentioned, we just really saw an opportunity to say, hey, how can we best serve this type of an investor, and how do we give more exposure to what Lennar is building across the country, and really also curate what we put up there. So we're going to put up there homes and communities that, underwrite, reasonably well for rental, that we think would generate some interest, that don't have any rental prohibitions or anything like that are good opportunities. And I think what we've seen so far is our thesis has, I think, proven true, that there's interest really across the country. So certainly there's interest in kind of the SFR hotbeds, in the Sun Belt, and the Southeast, but I think we're seeing interest across, probably 90+% of our markets, at least in some capacity. So we think that there's, just a lot of demand for this at the individual and kind of smaller investor level.
Yeah, we'll bring up the marketplace right after this last thought. My audience often asks me to design my perfect portfolio. And I've often told them, and I'll say it here, I would love to own 20 single family homes that are less than 5 years old. Right. And what you're giving in the marketplace is the ability to do that. And again, it's a curated list. It's not everywhere. But I think this is going to be a tool. If it hasn't already exceeded your expectations, I think it will, as more mom and pop investors look at it. Because I think, just naturally speaking, you hear Lennar selling to investors, and I think a lot of investors go, we're going to overpay. But what does that mean, right? We're looking at yield and cash on cash. And by the way, existing home sales with, people are delisting versus lowering prices. I think people are sleeping on new construction. What do you think, Nate?
I agree. I think it's a really good point. You mentioned wanting 20% of your portfolio to be newer construction. I think historically the challenge has been there's been a pretty wide premium on new versus existing homes. It's been hard to make it pencil. We're at a unique moment in time, and our friends at Resi Club put an article out on this recently. For the first time in modern history, the average price of a new home is on par with an existing home. And it's actually slightly lower right now. So that premium is historically there, and we think it's a short-term situation. We think there is a premium for new homes. But as a buyer, if you're thinking about it with an existing home portfolio, this may be that time to dip your toe in the water and build that exposure. And I'm sure part of that 20% is because it's a little less maintenance, right? It's a little more hands-off. You got a builder warranty. A lot of our homes are a 1 to 10-year warranty. And so there's minimal expenses along the way of that ownership. It's just the peace of mind. It's funny, we have on our marketplace, we have some property managers that help do some of that property management, some kind of preferred ones. Sure. In talking with them about our homes, they say, we love the Lennar homes because they're so easy to manage. There's very little we have to do. You get paid the same sometimes as an 1960s home. And so I just think there's some embedded quality of life advantage to owning them. And now you have that premium eliminated. So the yield really starts to make more sense.
Yeah, and you could build reserves. A lot of new landlords get into this. They're buying 1950s builds or even older in some parts of the country. And they're immediately getting slapped with huge upgrade bills, right? When you can't afford it, right? You get into a new build, and you just don't have that. You have time to kind of build that reserve, right? Put $100 away every month for 5 years, and then by the way, something breaks, you got the money, versus being slapped across the face, your third month before you built the reserves.
In that sense, it almost feels like it's a good diversification strategy. You look at your older existing homes, that may be a higher beta. There's more risk there, maybe high yield, but you also have a new roof coming potentially a couple of years down the road or something like that. So you get to layer in some more predictable expenses with the new home that I think diversify your risk overall in the portfolio.
Yeah, I'll go even one step further with you. Something that Olivia's my wife, right? We own stuff together. Something she and I will be doing, knock on wood, is we will be selling some of our older homes in California and 1031 exchanging into likely Lennar properties in Henderson or around that area via a 1031 exchange, right? So we're going to get all that equity built up, that's scraped, and then we're going to move it into a new asset. And then, by the way, we'll get bonus depreciation and all those extras that come with real estate. And why are we doing that? Well, folks, we have some homes that are 100 years old. And yes, they cash flow fine. And yes, we bought them right. And yes, we've owned them for 15 years. But you know what? We're getting old. And we would much rather own newer and closer, right? I moved to Vegas, Henderson, about 2.5 years ago. Fresno's now a long way away. It used to be 2.5 hours. It's now a flight away. And I'm here for easy life. I want less management, less stress. So, something we will execute in 26 and maybe multiple times are 1031 exchanges out of old, tired, California real estate into brand new Lennar properties in and around Henderson. That will be a strategy for 2026.
Yeah,
That makes a lot of sense. Sounds like we should get you on the marketplace.
I'm there. I'm already poking around. There's actually a contact out there. We'll talk offline. But let's show this, Davis.
Good.
I'm going to go to that screen now. You can talk about what people are looking at. Let me just put it on the stage. There you go. So what are we looking at here, Davis?
Yeah, so this is once you access the Lennar Investor Marketplace, this is kind of the default view that you'll land on here. So this is a quick view at what are all the homes we have across the country, and obviously Lennar's in a lot of different markets, 90 plus markets across the country here. So quick view of what do we have out there at the moment. You can then zoom in on that map or use the filtering.
Well, let's do that. Let's just show people. So you got that little dot in the lower corner of Nevada. That is my buy box. Why don't we click on that and just poke around a little bit?
Yeah, for sure.
Yeah, why not?
So if we wanted to zoom in down here in the Las Vegas market, here's and this is updated daily. We're adding communities as we go here. Inventory is changing as opportunity homes come online or are sold. As you can see here, like this home had a price drop recently, so we'll put that up there. You can then click in and kind of go through more underwriting, and ultimately, decide if this home is of interest to you.
Yeah, well, let's just show people, because again, I think people look at Lennar or think home builder, really not a Lennar thing, but all home builders like, hey, here's a list price, be done. No, you guys in the build to rent space have gone deeper, right? You are calculating or proposing a yield or a cap rate, right? There's actually some data behind this other than just a pretty picture. Yep. And then your location. Exactly.
Yeah, that's right. Yeah. So what we have here is in this pro forma tab, there's kind of this default view where what we try to do is pre-populate with some information to help you get started on the underwriting. Certainly would always recommend drill in, make up your own determinations on both rent and some of these other operating expenses. But by default, there's an automated valuation model going on behind the scenes here to help say, hey, here's a potential monthly rent to get you started. The comps tab actually has more comps that will back that up, and you can see what has been rented in the immediate area, which we've heard is a huge pain point. If you're an individual investor and you're trying to triangulate what is rent, painful, right? So this is pulling from multiple different data sources, MLS, institutional groups, other third parties, to then say here's a potential projected rent, but you can see the comps behind that. There's an ability to drill in more detail if you've signed in and created an account. I can show you that in a moment here. But it allows you to get a quick sense of what's going on with this home.
No, and this is what everybody should do. Frankly, this is what I did 5 or maybe it was 4 months ago when I started drilling. Because again, this is what I'm doing, right? I'm not kidding. My audience knows I've been shopping in Vegas, in Henderson, looking at Lennar's marketplace. And this is where it starts. Then your job's to go drive the neighborhood. Some make sense, some don't. Some you like, some you don't. Then you got to check your rents, called your rent box. Are the rents right? Are they not? And oh, by the way, it's no secret that this just like every piece of real estate, these are list prices. And you can write offers that aren't list price. Now you have the right to say no and all of that, but this is just like any other real estate transaction. As an investor, you can underwrite it to a number that you think makes sense, and the seller could say yes or no or counter. And this is not like menus at a restaurant. These are just suggested prices. And if you wanted to write something, I don't know, pick a number, 370, somebody could. They don't have to do 378. It's this is just like all other real estate. Is that fair?
Yeah,
that's fair.
Yeah, that's fair.
And I mean, to that point, the other thing, as you're drilling in there and looking deeper into the underwriting, we realize every investor is going to underwrite different, right?
Correct.
If you self-manage, you use a third-party property manager. What is your view on home price appreciation? What are some of your other, operating expenses that you're assuming going forward? So there's an ability to manipulate all of those different variables right there in that pro forma to really gain confidence. And here's how I think this is going to actually perform.
Yeah. Nate, did you want to say something there?
Well, I was gonna say, just like when you're buying a home too, you put down an offer here. There's still a conversation. It's not like
Of
it just
course.
happens on the internet. You'll have
Yeah.
somebody who knows how to work with investors that will give you a call, and just go through that process. So it's a low stress way to
Yeah.
submit your interest and begin that conversation. And we think this is really resonating. And we're going to keep building more features.
No, I think you're actually pointing at something that I witnessed firsthand, but frankly underappreciated. This is an investor portal. This is an investor activity. The conversations I had with the Lennar team in and around Henderson about this marketplace wasn't just like a new home sales rep, right? It wasn't. It was somebody who talks the investor talk, knows the language, and that was very much appreciated. Makes the conversation more efficient and quick, which
Yeah.
I obviously love. So great point there. I missed that, but that's really valid. Let's together. I'm going to put this in the background for a minute because I think this is important for you and for my audience. When you think about the avatar, and I'm going to give you my opinion as well, but like, who should be looking at this marketplace? And I'll put it on the screen, but I think we should talk about the avatar that should be going here. What do you guys think? And I'll come in over the top. We'll go to maybe Nate first and Davis second.
Yeah, I mean, I think the most common example we're hearing is somebody who has disposable income and is looking to do something low maintenance, that wants that cash flow that's predictable and more of a stress relief than a stress creator. And I think that's we're seeing a lot of people looking in, California that want to buy in the Southeast, or a different part of town in Fort Worth that want to look to Northeast Dallas. And so we're just seeing people that maybe are looking beyond just their current footprint and looking at how can I get that exposure to additional markets in a low stress way. Seeing a lot of people wanting to get that managed locally, maybe not doing it themselves. So we see that. I'd say that's one avatar. Then there's also just I do it myself. And like I mentioned before, that diversification is a story we've heard from others who they do it all themselves and they don't want to go in and do the repairs and maintenance. They're self-manager. And so this is one they can just spend less time on, but just build the portfolio a little more easily.
Yeah. Davis, you want to add something there?
I think Nate captured it well. I think that, at a broad level, if you're looking to get into single family rental investing for the first time, we think, new homes is a really nice way to break in there for all the reasons we've discussed in terms of, simplicity of operation and ownership. I think the other thing just to note is, as you're looking to, maybe as an existing investor looking to expand across, whether it's other markets or even within a market, I think there's some value in having, a common trusted partner in that, where you're buying the homes from. So you kind of understand, here's the way the sales process works. Here's the product. You know that the company is going to stand behind it. There's some level of assurance that you can have in that. So I think that's kind of the other feedback we've heard too, that we're seeing some value in, certainly from investors.
Yeah. So when I think about my community and people that kind of follow the one rental at a time, I actually think you have more opportunity than you think you have. So first off, there's lots of what I call California investors or New York investors or Florida investors who, for whatever reason, believe they can't invest in their backyard. So a lot of them get enamored with the Midwest. And I've seen lots of people do it okay, and then lots of people get burned with out-of-state investing because it's frankly cheap. But that burns, right? There's lots of ways to go broke buying cheap. If you're one of those California investors or whatnot, I challenge you, especially this time of year, holiday season, you're off work, whatever it is, go check out some of these markets in the marketplace. As you saw, they're not everywhere, but they're in a lot of places, and a lot of places where, frankly, you want to live, right? Lennar's not going to be building homes in, Timbuktu, right? They're going to be building where population is growing, where infrastructure is growing. So it's like kind of like Walmart, right? Walmart doesn't drop a superstore just anywhere. There's a lot of research there. So I would tell investors who are doing the research and struggling, check out the marketplace. See if there's any indications there. Then to an earlier part of the conversation, especially now, and this won't last forever. Back to Resi Club's article. It won't last forever, but it is true now and likely true through 26. New home sales are cheaper than existing. We have seen more delistings. We will see more accidental landlords in the next year than we probably saw in the last decade, because it makes financial sense. Why drop the price 40 grand when you have a 2% mortgage, you'll cash flow $1,200. It makes no sense. Just keep it off the market and rent it for 5 years. So again, I think a lot of investors are sleeping on new construction. I think the announcement of Lennar's marketplace, I tried to make it a big deal in my audience. I don't think enough people are talking about it. The fact that Lennar, one of the largest home builders in the country, is going, hey, we want to serve mom and pop investors. Here you go. And then to your point, last point you made, Nate, we're making the process easier by removing some, new home consultant. We're treating you like an investor. I just think a lot of investors are sleeping on it and they should poke around. What do you think of that, Nate?
Well, of course I agree. Yeah, I think you said it very well. I don't think I have anything to add there.
Yeah, there you go. Well, Davis, if somebody wanted to poke around, look at the website, what would you tell people to do?
Yeah, I would say, visit that website that you had there. Check it out. As you start browsing, what we've tried to do is open it up so you can, go ahead and get a quick look at what's out there. As you want to drill in and get more details, as you kind of saw in that little demo we did, create an account, very basic, name and email, agree to the terms of service, and you can roll. It'll help us also stay in touch with you on when, new homes are listed or there's price drops or anything that's changing that would be relevant to you. And then certainly, reach out to us. Let us know if you have any questions. There's phone numbers up there that you can call for every home that'll get you in touch with the right people. Once you submit an offer, as Nate said, it starts a conversation with the right people at our division. So certainly, go explore.
There you go, folks. At the end of the day, it's something you should definitely be poking at. I think we are real estate. Everything works in real estate. Just some seasons, highlight other things. I've been asked what's working now. I really think I've been doing this almost 30 years. This is the only time I remember where new homes probably make more financial sense than existing home sales, especially when you add in expenses and reserve management and things of that nature. And as I said earlier, if I designed my perfect property, it would be 20 single family homes, 5 years or younger. And to close it out, Olivia and I will be executing at least one of these next year where we sell out of an old home and we move into a new home, likely a Lennar home, likely in the Vegas or Henderson market. Guys, take care of yourself. Happy holidays. Thanks again.
Thanks. Appreciate it. Take care.
You got it.